What is up? Mike Albert here. I am a fractional CFO. I help small businesses be smarter with their money. And today I am going to go through my weekly allocation. Actually, I'm going to do a condensed version of my weekly allocation because the first time I tried to do this, the recording didn't work. So I'm going to go through it really quickly. But it's also a special part of the year because it's the first allocation of a new quarter, which means that we need to reset our allocation targets. So to do that, I'm going to hop over to my simple financial model, is what the tab is called. You can download this, a template of this. If you just go to the descriptions, there should be a link to that. And if you do, just click File, make a copy, and you can either download your own version in Excel, or you can make a Google Sheet, whichever you prefer. So to start, let's go to reports, run a P&L for the quarter. So to start, I updated all of my quarterly actuals. So just took those straight from my profit and loss report. So let's do last quarter and collapse. So when I look at my P&L, I always look at it from a condensed version, and then I will expand and zoom into anything that I want to dig into. But for the sake of this, just updated my actuals here, as you can see, and then I started to think about, all right, what do I want to happen? What do I want to happen in Q3? So I want to hit about 34,000. I actually feel comfortable with 33,000, but I wanted to push myself a little bit. So 34 is the target. And then my payroll and my sales and marketing expenses, I expect those to flex up the same way my sales do. So I kept those percentages the same as my actuals from the previous quarter. And then for general administrative, I don't expect them to be rising at the same rate as my sales. So these I would consider more like fixed expenses. So I actually bumped this percentage down to 8% to reflect that. So about 22% of sales is what I'm expecting it to cost to run my business this quarter. And I expect to have about 78% of what I would call discretionary cash flow. So this 26,000, I get to decide what happens with it. So I'm going to take about 22,000 in draws. So if we look at that over 13 weeks, it's about 1,700 per week. So if you've been following along, I have been taking about 1,800 per week. Now I'm going to bump that down to 1,700 per week. So that will make a difference in how, like, the net dollar amounts that I'm moving to all of my personal allocations. But you guys, I'll show you what that looks like. The only other thing that I wanted to point out is in Q2 we have a period where we have two tax payments. If you follow the IRS's quarterly estimate tax payment schedule, you pay one on 4/15 and then another on 6/15, so it's a short period. So we're going to make two payments. We made two payments in Q2, and you won't make one in Q4. So Q3 will have one payment. Q4 will not have any payments, which is awesome. All right, so again, I kept these about the same. What I decided for my allocations, I'm going to do 65% for my comp. I'm going to do about 3% for profit, 10% for tax, and 22% for operating expenses. So let's see that in action. Now I'm actually not going to do these allocations today because, like I said, I recorded the video and it just didn't turn out. So let's just go through it as if we were going to do it. So my income account when I logged in had $32,3684. And then I allocated 65%, 2,100 to owner comp, 3% to profit. And this profit account just sits there until the end of the quarter when it's time to make a decision what to do with that. Tax, 323, and then operating I moved 712. And like I said, 1700 is my comp target for the week. So I took 1700 and allocated it in this order. So 170 went to my brokerage account, 85 goes to our family reserve savings, 500 for our budget, which is our discretionary things like food, going out to eat, entertainment, things like that. And the purpose of that is just to kind of keep that under control. And then 843 to our fixed account, which is for like the more like bill type stuff. So mortgage, car insurance, all that kind of stuff. And then I make a 1% allocation to each of these, 6? 1, 2, 3, 4, 6 accounts. So an extra mortgage payment, and then our kids' ESAs, education savings accounts, and then 17 to our IRAs. The goal is, as we grow, to be able to bump these up into some higher numbers. And that's really it for today. If you guys have questions, put them in the comments. Otherwise, we'll be back next week. Thank you.